Module number 3. In module 1 and 2, we learn how software systems work, how business analysts gather requirements, Agile and Scrum, Jira, user stories, testing, STLC and STLC. Okay, so now we begin in the banking domain section. So this is where many business analysts struggle. They understand BA concept, so anyone can write user story and create BRDs, but do not understand how bank actually operate. Okay, so a banking business analyst must understand banking products. So any application if you are going to start, first you must understand the application very well, and what are the features and functionality. So let's understand first the banking products, banking customer, who is the user of that application actually, and what are the business process which we need to automate, and the banking system, these are the business rules, and banking regulations, these are the fraud and AML. Okay, so today we learn how bank function as a business. So what does a bank do? Everyone know what does a bank know. So at a high level, a bank performs three major activities: accept deposit, that's a core functionality. Customer deposit money into bank accounts, example checking account, savings account, business account. Okay, so for example, Sarah deposit $1,000 to her savings account. So the bank stores the money and records the balance. So second one, lend money. So everyone use credit card, everyone use car loans, home loans. So bank generate revenue by lending money. For example, personal loans, auto loans, which is car loan, mortgages. Okay, so business loan, credit card. John borrows 20,000 for car purchase. The bank earns interest on the loan. Okay, this is how the bank operate. So number 3, process payments. Bank help customers to move money. For example, debit card payment, credit card payment, bill payment, electronic transfer, wire transfer. So Sarah pays her electricity bill using online banking. Okay, so type of banking. Bank provide different service for different customers. So first, retail banking. You will be hearing retail banking on the job description. So let's understand what's the retail banking. So retail banking service individual customers. Okay, example, savings account, checking account, credit card, mortgages, personal loan. So customers are individual and families. Okay, so that we call as a retail banking, but the products are same. You see, these products are same. Commercial banking serve businesses. For example, business account, commercial loans, cash management services, business credit facilities. So that's the different. This is for these services for business. So customers, companies and organizations. Okay, see, these are the customers. Investment banking. So this is a popular topic. Investment banking supports large corporate transactions. Example, IPOs, share market, mergers and acquisitions, capital raising, corporate advisory. So large corporations. So you see a lot of openings for the investment banking. First, you need to understand the basic retail product, and you can learn how the investment products work. Okay. Common banking products. As a banking BA, you will frequently work with this product. Checking account used for daily transaction. Features debit card access, bill payment and fund transfer. Savings account used for saving money. Features earn interest, lower transaction volume. Credit card allow customers to borrow money up to a credit limit. Example, credit card, you have 5,000, 10,000 credit card limit, available credit 4,000. Okay. Personal loan, customer borrows a fixed amount and repays over time. Example, loan amount 20,000, term 5 years. Okay. Mortgages, loan used to purchase a property, often large financial product used by the customers. Customer journey, let's follow a typical customer. Sarah. Step number 1, open bank account. Step 2, deposit money. Step 3, use debit card. Step 4, apply for credit card. Step 5, apply for a personal loan, apply for a mortgage. So bank often support customer throughout their financial lives. Accounts life cycle. A business analyst must understand the life cycle of an accountant. So account creation, not accountant, sorry, apologize, account. Okay, so we are talking about the product. So account creation, customers opens account, status, pending, active. Okay, so I'm just giving an idea, so we'll get into this detail more. Account usage, customer deposit money, withdraw money, make payments. Okay. Account maintenance, customer update, address, phone number, email. Account closure, customer closed the account, status closed. Okay, so now is the life cycle. First account creation, okay, and what customer has to do, status, account usage, account maintenance, account closure. So these are the 4 actions on a account life cycle. Loan life cycle, one of the this account life cycle applicable for any type of account. Okay. Loan life cycle, one of the most common banking process. Step number 1, customer applies. Step number 2, document submitted. Step number 3, credit assessment. Step number 4, loan approval. Step number 5, loan funding. Step number 6, loan repayment. Step number 7, loan closure. Payment life cycle. Let's examine a debit card purchase. Customer buys grocery. Step number 1, customer swipe card. Step number 2, merchant sends payment request. Step number 3, payment network request, routes request. Step number 4, bank verify funds. Payment approved. Step number 6, merchant receive confirmation. Customer receive receipt. So for example, if you buy something from Amazon, so use your debit or credit card. So Amazon send a request, payment request, payment network route request, right? So Amazon send request to MasterCard or debit, Interact. Interact send, so that's the network. Interact send request to bank, whatever the bank, ABC Bank, and confirming we receive a request to pay against one payment from your bank. This the number and everything. So when bank approved, yes, we have money, and network debit or Interact will send this confirmation to Amazon, so your fulfillment or your transaction will be completed. Okay. Think like a business analyst. So suppose the bank wants to improve the loan process. A business analyst task is who is involved, what system are used, what information is collected, where are delay occurring, what business rules exist, what regulatory requirements apply. These questions help uncover opportunities for the improvement. Okay. So bank stakeholders, common stakeholder in a banking project, customer, who's the user, uses banking service, branch employee, assess customers, loan officer, reviews application, credit team, evaluate risk, compliance team, regulatory compliance, fraud team, fraud prevention, product owner, product direction, developers, build system, testers, validate solution. Okay. Think like a BA exercise. A customer apply for a personal loan, identify who are the stakeholders, what information is required, what system may be involved. Okay, so this is your homework. Okay, you can do it by yourself. Okay, so lesson summary. Bank primarily accept deposit, lend money, process payment. These are the 3 main actions. A banking business analyst must understand banking product, customer journey, account life cycle, loan life cycle, payment life cycle. Okay, so these processes from the foundation of most banking projects. Remember this rule: before improving a banking system, a business analyst must understand the banking process that system supports. Okay, thank you. I'll see you guys on lesson number 32. Previous lesson we learned how banks and operate and review the major banking products and processes. Today we are going to analyze one of the most important banking process, which is opening a bank account. Okay, so every bank customer begins their journey through this process. As a banking business analyst, you will likely work on onboarding, digital account opening, KYC, AML, fraud prevention, and customer information management projects. Okay, so understanding this process is essential. So what is customer onboarding? Okay, customer onboarding is the process of bringing a new customer into the bank. The bank must verify the customer identity, collect required information, comply with regulation, create customer records, open the account. Okay, so these are the steps need to follow. So only after these steps are completed can customer begin using banking services. Okay, so real world scenario. Meet David. David wants to open a new checking account using the bank mobile application. The process appears simple to David. He downloads the app, he enters his information, he uploads identification, he submits the application. A few minutes later, he receives confirmation. Behind the scene, many systems and teams are involved. Okay, so you can try also if you want a bank account, and these are the steps involved. So let's understand what's happening behind the scene, because you need to understand the customer journey and the system also. So why can't the bank just open the account? Bank must follow strict regulation. Why bank has to follow strict rules? The bank needs to know who is this customer, right? So if it is a digital, anyone can apply from anywhere. Is the identification valid? That's what first validating. Is the customer involved in fraud? That's we need to validate, right? So the customer can do fraud in one bank and they can close the account and they can come to another financial institution. So it's very important to see if this customer personal information involved in fraud before we onboard the customer. Does the customer appear on a regulatory watch list, right? So I'll not get into more detail, like if this customer blocked by sanction country, or like this customer is wanted. So we have to check everything. Okay, so this is where KYC and AML become important. Okay, so before we onboard the customer, we check all this information. So what is KYC? KYC stand for Know Your Customer. KYC help banks verify customer identity. The bank collects information such as full name, date of birth, address, phone number, email address, government identification, example of driving license, passport, permanent resident card. What is AML? AML stand for anti-money laundering. Bank must prevent criminal from using banking services to hide illegal money. AML system help identify suspicious transaction, high-risk customers, regulatory watch list matches, potential financial crimes. Okay, so account opening process. Let's walk through the complete process. Step number 1: customer starts application. David opens the mobile banking app. He select open new account, something similar. Okay, the system display application form. Step number 2: customer enters personal information. David enters first name, last name, date of birth, address, phone number, email address. The system validate mandatory fields. Step number 3: customer upload identification. David upload driver license. The system capture the document. Some banks also use self-verification, facial recognition, optical character recognition, OCR. So you have to upload your photo selfie and along with your ID. Okay. Number 4: identity verification. Identity verification system confirm document authenticity, customer identity, information accuracy. The bank verify is David is a real person. Okay, so bank send this information to the identity verification vendor, and identity verification vendor confirm whether this person is real or not. Okay. Step number 5: KYC and AML checks. The banks perform KYC validation, verify customer identity, AML screening, check regulatory databases, check sanction lists, check fraud databases. Decision point: did the customer pass verification? Yes, continue account creation. No, reject application or request additional information. So this will go to a manual review for the further review. Step number 6, customer record creation. The bank creates a customer profile, customer ID example, cust1001. The customer now exists within the bank system. Step number 7, account creation. The core banking system create account number, for example 123456799, account type checking account, status active. Step number 8, customer notification. The customer receive email, SMS, push notification. Congratulations, your account has been successfully opened. Account opening process flow. Start, customer submit application, upload identification, identity verification, KYC validation, AML screening, decision, pass, yes, create customer profile, create account, send confirmation, and no, if not, no, request additional information or reject application. So system involved, many system participate in this process. Mobile banking application collect customer information. Customer information system store customers profile. Identity verification system validate identification. AML system perform compliance check. Fraud detection system identify suspicious activity. Core banking system create accounts. Notification system send confirmation messages. So think like a business analyst. Imagine stakeholders say customer abandoned the application process too often, right? So customers are signing up, but they're not completing the process. A business analyst asks, where do customers abandon? Which step causes frustration? Are document upload failing? Are verification checks tracking too long? How can we simplify onboarding? Sample user story feature digital account opening. As a prospective customer, I want to open a bank account using my mobile phone so that I can become a customer without visiting a branch. Sample acceptance criteria for the onboarding scenario. The customer must provide all mandatory information. Customer must upload valid identification. System must perform identity verification. System must perform KYC validation. System must create an account after successful verification. Customer must receive confirmation. So you have to write what are the mandatory information. So this is high level topic. You have to list, okay, what are the customer must upload the valid identification. So what are the valid identification? You have to capture the details so that tester can verify. Okay, so this just to give an idea. Sample functional requirement. The system shall allow customer to submit account opening applications. The system shall allow customer to upload the identification document. The system shall perform KYC validation. System shall perform AML screening. System shall create a customer profile upon successful approval. Okay, so think like BA exercise. You are assigned to improve digital account opening. Answer: what business problem might exist? What stakeholder would you interview? What system are involved? Okay, so you can answer to these 3 questions. So lesson summary: account opening is the first major interaction between a customer and bank. The process includes customer onboarding, identity verification, KYC, AML, customer profile creation, account creation, notification. Okay, as a banking business analyst, understanding this process is critical because many banking projects revolve around customer onboarding. Remember this rule: the bank cannot create an account until it knows who the customers is and confirm that regulatory requirements have been satisfied. Okay, thank you. That's the end of lesson number 32. In the previous lesson, we learned how a bank opens a new account for a customer. So we saw that after identity verification, KYC checks, AML screening, the bank creates the customer profile and then create the account, right? So today we are going to learn about one of the most important concepts in the banking system, customer information file, KIF. So if you works as a banking business owner, you will hear terms such as KIF, customer profile, customer master, customer record. So KIF is referred to customer information file. It's a number. Okay, almost every banking system use some version of customer information file. Understanding KIF is essential for requirements gathering, data analysis, SQL queries, API integration, core banking projects. So what is KIF? KIF stands for customer information file. A KIF is unique customer record maintained by the bank. Think of the GIF as the master profile. The GIF contains information about the customer but not represent the specific bank account. Simple example: customer David Johnson. The bank creates customer ID GIF 10001. The GIF stores information such as name, date of birth, address, phone number, email, customer status. The customer may have multiple accounts but only one GIF. Okay. Important rule: one customer, one GIF, many accounts. So this is one of the most important concept in banking. Real world example: David's open account, checking account, savings account, credit card, mortgage, many product, one customer, one GIF. Okay. Customer versus account, new business analysts often confuse this concept. Let's compare. Customer represent the person. Example: name, date of birth, address, phone number, email ID, customer ID. Account represent the banking product. Example: account number, balance, account type, status, opening date. Okay, so please understand these are very important for other common gathering. Example: customer David Johnson, customer ID GIF 1000 accounts, account number 1, checking account number 1111, account number 2, savings account number 2222, account number 3, credit card, account number 3333. Notice one GIF, multiple accounts, right? So why do bank use GIF? Imagine David change his address without a GIF. The bank would need to update, right? So checking account, savings account, credit card, mortgage separately. So this create errors. With a GIF, update customer profile once. All related product use the updated information, right? One to many relationship. Common of GIF data: customer information file typically contains customer information, customer ID, first name, last name, date of birth, gender, contact information, phone number, email, mailing address, identification information, passport number, driving license, expiry date, compliance information, KYC status, AML status, risk rating, customer type. So these are all linked to GIF. Relationship information, linked account, linked product, customer segment. Okay, customer type: bank often classify customers. Example: personal banking customer, individual customer. Example: David Johnson. Business customer: companies and organization. Example: ABC Manufacturing Inc. High net worth customer: customer is significant asset, often receives specialized services. Customer status: the GIF may track customer status. Example: active, inactive, pending verification, restricted, closed. So customer account relationship, let's visualize the relationship. Customer David Johnson, GIF number 1000 checking account -1111, savings account 222, credit card 333, mortgage 4. The customer sits the center right here. Customer is the middle, then all the account, right? The customer sits the center, product can connect to the customer. Okay, so database, let's make this one. So database example: customer table, GIF number 1001, David Johnson, our customer, and phone number. GIF number 2, Sarah Smith, and this the phone number, right? So account table is here, the account number is here, and GIF is here. Okay, so these two are related to David Johnson, savings and check-in, and 3 is related to Sarah, right? Credit card. So notice the GIF ID links to customer to account. So think like a business analyst. A stakeholder say we want customers to update their phone number using mobile banking. A BA asks where's the phone number stored, which system wants customer information, which system receive update, should all linked account receive the update automatically. This question often involve the GIF. So real project example: project customer address change. Business requirement: customer should be able to update their address online. BA questions: where the address is stored, who owns the customer record, do we require verification, should we notify customer, what downstream system receive updates. Sample user story: as a banking customer, I want to update my contact information so that the bank always has my current detail. Sample acceptance criteria: customer must authenticated. Customer must be able to update phone number. Customer must be able to update address. Customer must update the customer information file. Confirmation message must be displayed. Think like a BA exercise. Customer Sarah Smith, product, checking account, savings account, credit card. Answer. How many gifts should Sarah have? How many accounts does Sarah have? If Sarah change her phone number, where should the update occur first? Why is the gift useful? Okay, answer to these questions. Lesson summary: the customer information file. GIF, the master customer record used by banks. A GIF contains customer information, contact details, identification details, compliance information, product relationship. Remember these key concepts: one customer, one GIF, many account. Okay, understanding the GIF is critical for banking business analyst because customer information is used almost every banking system. Remember this rule: accounts belongs to customers. Customers are represented by a GIF. Thank you. That's the end of lesson number 33. This lesson we learn about the customer information file, which is GIF. So we learn that one customer can have many accounts. Customer information is stored in a master customer profile. The banking products are linked to a GIF. Today we will learn about one of the most important system in the banking industry, the core banking system, CBS. The customer information file is the customer's profile. Then the core banking system is the engine that runs the bank, right? So every banking business owner should understand how core banking system work. So what is a core banking system? A core banking system is the central system that manages the bank's day-to-day operation. Is it responsible for customer account? So it is responsible for customer account, deposit, withdrawal, transfers, loans, interest calculation, account balances, transaction history, and many more. So think of the core banking system as the bank's central record keeper. Sample example: customer John David Johnson has checking account, savings account. When David check his account balance, where does the information come from? So answer: the core banking system. So when David transfer money, where is the transaction recorded? Answer: the core banking system. So when David deposit money, who upset the balance? Answer: the core banking system. So why is the core banking system important? Right? Without the core banking system, the bank would not know who owns an account, current balances, transaction history, loan balances, interest calculation. The bank could not operate without CBS core banking system. So major functions of a core banking system: customer management, stores customer relationship, example GIF, customer profile, customer status, customer relationship, example customer Sarah Sumit, customer ID, GIF number 10001, account management, the manages bank account, example checking account, savings account, business account. The system stores account number, account type, balance, and status. So number 3, transaction processing. So processes customer transaction, example deposit, withdrawals, transfers, payment. Every transaction must be recorded. Okay. Number 4, balance management, maintains the account balances, example opening balance $1,000, deposit 500, new balance is 1500. The core banking system perform these calculations. So interest calculation, calculates interest, example savings account balance $10,000, interest at 2%. The core banking system calculate and applies the interest. Okay, so loan management, manages loan, example personal loan, mortgages, auto loan. The system track loan balances, interest, payment schedule, due dates. Real world banking architecture, many new BAs assume the mobile banking application store everything. This is incorrect. The mobile application is only a front end system. The core banking system is usually the source of truth. Okay, architecture example: mobile banking app, API layer, core banking system, customer database, transaction database. So account balance example: David opens a mobile banking app, he clicks view balance. What happens? Step number 2, mobile app send request. Step number 2, API receive request. API contacts the core banking system. Step number 4, core banking system retrieve the balance. Step number 5, balance return to the API. API send response to the mobile app. Step number 7, customer see the balance. Right? So money transfer example, let's follow a transfer. Customer David, source account 5000, transfer 1000, destination Sarah. Step number 1, customer submit transfer, system validates account. Step number 3, system verify available balance. Step number 4, system debits 1000 from David. Step number 5, system credits 1000 to Sarah, system records transaction. Step number 7, confirmation return. Business rules, core banking system enforce business rules. Example, transfer cannot exceed available balance. Closed accounts cannot receive deposit. Inactive accounts cannot perform transaction. Loan payment must be applied before due dates. These rules are critical for business analyst. Okay. Common core banking data, customer table, customer information, account table, account details, transaction table, transaction history, loan table, loan information, interest table, interest calculation. So think like a business analyst. Stakeholders say customer report incorrect balances. A business analyst asks which system provide balances, where is the balance calculated, what transaction type impact balances, did an integration fail, did a transaction post incorrectly. These questions often lead back to the core banking system. Sample user story. As a banking customer, I want to view my account balance so that I can monitor my finances. Sample acceptance criteria for this scenario: customer must be authenticated, system must retrieve balance from the core banking system, current balance must be displayed, available balance must be displayed, error message must appear if retrieval fails. Okay. Exercise, customer Sarah, current balance $2000, deposit 500, withdrawal 300. Question, what should the final balance be? Which system update the balance? Which system is considered the source of truth? Why? Why is the transaction history important? Okay. Common beginner mistakes. Mistake 1, thinking the most mobile apps store the balances. The core banking system usually owns the account balances. Mistake number 2, ignoring the business rule. Every transaction must follow banking rules. Mistake number 3, no understanding system integrations. Many banking applications rely on the core banking system. Lesson summary. Sorry. The core banking system is the central system that manages banking operation. It handles customers, accounts, transaction balances, loans, interest calculations. As a banking business analyst, understanding the core banking system is essential because most banking projects involve integration with it. Remember this rule: the core banking system is the source of truth for customer account and financial transactions. So that's end of lesson number 34. In the previous lesson we learned about core banking system. We learned the core banking system is responsible for customer account transactions, balances, deposits, withdrawals and transfer. So today we are going to learn one of the most important topics in the banking transaction and account balances. So this topic appears in many banking projects because customers frequently contact banks regarding missing transactions, incorrect balances, pending payments, holds on funds transfer issues. As a banking business analyst, understanding how balances work is essential. So what is a transaction? A transaction is a financial activity that changes an account balance. For example, deposit, withdrawal, money transfer, debit card purchase, ATM withdrawal, bill payment, interest payment. Every transaction creates a financial record. Simple example: starting balance $1000, deposit 500, new balance 1500. The deposited transaction. Another example: starting balance 1500, withdrawal $300, new balance is 1200. So the withdrawal is also transaction. Debit versus credit. These terms often confuse new business analysts. For a customer, debit usually means money leaves the account. Credit usually means money enters the account. Okay. So example: current balance 2000, salary deposit 1500, credit new balance 3500. So ATM withdrawal 500, new balance 3000. So account balances. Banks often display multiple balances. The two most important are current balance and available balance. Current balance represent all posted transaction. Example: Current balance 5,000. This reflects completed transactions that have been officially recorded, right? So available balance represents the amount to the amount the customer can actually use. Example, current balance $5,000, debit card hold 500. This will happen usually when you deposit a check, right? So available balance 4,500. The customer can spend held amount for the these are for the verification, right? So why do current and available balance are different? Because some transactions are still pending. This is one of the most common customer questions. A pending transaction has been authorized but not fully posted. Sarah books a hotel room. Hotel place 300 authorization hold. The transaction is approved but not yet finalized. So this will happen. You go to a gas station. Usual credit card transaction happen like this, right? So current balance 2000, available balance 1700, difference 300 pending authorization. Authorization hold and authorization hold temporarily reserves funds. Customer common example: hotel, gas stations, car rentals, online purchases. The merchant wants to ensure funds are available. Real example: current balance 1000, gas station hold 150, available balance 850. Even the final purchase is only 60, the hold may remain temporarily until settlement. Okay, the transaction life cycle. Let's follow debit card purchase. Customer debit purchase $100. Step number 1, card presented. Step number 2, merchant request authorization. Step number 3, bank verify funds. Step number 4, authorization approved. Step number 5, hold placed. Step number 6, merchant submit settlement. Step number 7, transaction posted. Step number 8, hold removed. Step number 9, balance updated. Money transfer example: source account 5,000, transfer $1,000. Step number 1, customer submit transfer. Step number 2, bank validates account. Step number 3, balance verified. Step number 4, account debited. Step number 5, destination credited. Step number 6, transaction recorded. Step number 7, confirmation generated. Transaction status. Transaction often have status. Example: pending, authorized, posted, completed, rejected, reserved, cancel. Understanding the transaction status is important during the requirements gathering. Reversals: sometimes transaction must be reversed. Example: merchant accidentally charged customer twice, bank reverses duplicate charge. Original transaction $1,000, $100, reversal 100, net impact 0. Banking business rules. Example: customer cannot withdraw more than available balance. Closed account cannot perform transaction. Funds must be available before transfer approval. Duplicate transaction must be prevented. These rules are common in banking projects. Think like a business analyst. Customer complain, my balance is $2,000 but I can only spend $1,700. A BA investigate, are these authorization holds? Are transaction pending? Did a merchant place a temporary hold? Has settlement occurred? Understanding transaction processing help answer these questions. Sample user story: as a banking customer, I want to view my transaction history so that I can track my account activities. Sample acceptance criteria for this scenario: customer must be authenticated, system must display posted transaction, system must display pending transaction, transaction amount must be visible, transaction status must be visible. Sample functional requirement: the system shall display current balances, the system shall display available balances, the system shall display pending transactions, the system shall display transaction status. Things like a BA exercise: account information, current balance $3,000, hotel hold 500, pending debit card purchase 200. Questions: what is the current balance? What is the available balance? What are the balances? Why the balances different? What transaction status might exist? Common beginner mistake. Mistake number 1, assuming current balance equal available balance. These are often different. Mistake 2, ignoring pending transaction. Pending activity affects customer spending power. Mistake number 3, not understanding authorization holds. Many customer components involve temporary holds. Lesson summary: transaction represent financial activity that impacts accounts. Important concepts include debit, credit, current balances, available balance, pending transaction, authorization hold. settlement reversals. As a banking business analyst, understanding transaction processing is critical because many banking systems revolve around transaction management and the balance calculation. So remember this rule: the current balance shows what has posted, available balance shows what the customer can spend. Okay, so that's lesson number 35. Thank you. This lesson we learn about banking transaction and account balances. So today we'll learn one of the most important banking processes, loan processing. Okay, so the loan are one of the primary ways bank generate revenue. As a banking business analyst, you will frequently work on projects involving LOS, loan origination systems, credit card decisioning system, document management system, underwriting platforms, loan servicing systems. Understanding uh, understanding the complete loan life cycle is essential for a banking BA. Okay, so what is a loan? A loan is money provided by a bank to a customer with agreement that the customer will repay the amount over time. Okay, the customer pays principal, interest, and fees if applicable. Okay, sample example: John, loan amount 20,000, loan term 5 years, interest 8%. John received 20,000 from the bank. He repays the bank through the scheduled payments. Type of bank loans. Bank offer different type of loans. Personal loans used for personal expenses. For example, home renovation, education, medical expenses. Auto loan used to purchase a vehicle. Example, customer buys a car. Bank finance the purchase. Mortgage loan used to purchase property. Example, house, condominium, usually a long-term loan. Business loan provide to organization used for expansion, equipment purchase, operations, right? So loan life cycle: a loan moves through the several stages. Let's understand this complete life cycle: loan application, document collection, credit assessment, underwriting, approval decision, loan agreement, funding, repayment, and loan closure. Okay, step number 1: loan application. The customer applies for a loan application channel: mobile banking app, website, branch, call center. Okay, customer provide personal information, employment information, income detail, loan amount requested, loan purpose. Okay, example, customer Sarah requested loan for 30,000, purpose home renovation. Step number 2: document collection. The bank collects supporting documents, for example, identity documents, driver license, passport, income documents, pay stub, employment letter, bank statements, financial documents, existing loans, credit card statements. Business analysts view the BA as: what documents are required, are documents mandatory, how are documents uploaded, where are documents stored. Step number 3: credit assessment. The bank evaluates the customer risk. The bank checks credit score, income, employment history, existing debts, payment history. Okay, so the example: in customer income 80,000 per year, existing debt 10,000, credit score excellent, the customer may receive a positive assessment. Step number 4: credit check. The bank connects with the external credit bureaus. Example, credit history check, credit score retrieval. The system evaluates: can this customer repay a loan? That's the purpose of credit checking with the external credit suppliers. Step number 5: underwriting. Underwriting is the detailed risk assessment process. The underwriter reviews customer profile, financial information, credit history, loan request. The underwriter decide, approve, reject, request more information. Step number 6: loan approval decision. The system authorized employee makes a decision. Possible outcomes: approved, customer receive loan offer; rejected, customer does not meet requirement; pending review, additional information required. Step number 7: loan agreement. If loan approved, the customer receive an agreement. The agreement includes loan amount, interest rate, payment schedule, terms and condition. Customer accept the agreement, right? So step number 8: loan fundings. After acceptance, the bank release funds. Example, loan amount 20,000, funds deposit to customer's account. Step number 7: loan repayment. Customer makes regular payment. Each payment include principal amount and interest payment. Example, monthly payment 450. Breakdown: principal is 300 and interest is 150. Some cases this the rival. The interest is 300 and principal is 150, especially for the mortgage payment. Okay. Step number 10, loan closure. The loan is completed when all payments are made, balance becomes zero, loan status close. Loan process flow, customer applies, documents submitted, credit check, risk assessment, approval decisions, agreement sign, funds release, repayment, loan closed. The system involved in a loan processing, many systems work together. Loan origination system, LOS, manage application, documents, approval, workflow. Credit bureau system provides credit score, credit history. Document management system, store pay stub, identification agreements. Fraud detection system checks suspicious application, identity fraud. Core banking system handles loan account creation, loan balance, payment. Notification system sends approval messages, payment reminders. Think like a business analyst. Business says customers are waiting too long for a loan approval. BA investigate why, where is the delay, application submission, document verification, or credit check, or underwriting, approval workflow, or funding. So sample Epic digital loan application platform, sample feature online personal loan application, sample user story. As a customer, I want to apply for a personal loan online so that I can receive financing without visiting a branch. Acceptance criteria, customer must be authenticated, customer must be enter loan amount, customer must be provide employment information, customer must upload required documents, system must perform credit assessment, system must display application status, sample functional requirement. The system shall allow customer to submit loan application, system shall validate mandatory application fields, system shall allow customers to upload supporting documents, system shall send application for credit review, the system shall display loan application status. Think like a BA exercise. A customer apply for a 50,000 personal loan. Who are the stakeholders? What systems are involved? What documents might be required? What decision must the bank make? Common beginner mistakes. Think loan approval is only the manual process. Modern banks use automated decision system, ignoring compliance requirement. Loan must follow regulation, no understanding integration. Loan systems communicate with many other systems. Lesson summary: the loan lifecycle include application, document collection, credit assessment, underwriting approval, agreement, funding, repayment, closure. A banking business analyst must understand the process to analyze loan systems or create effectively requirements. Remember this rule: a loan system does not simply approve money, it manages risk, compliance, customer information, and repayment throughout the entire loan's life cycle. So that's the end of lesson number 36. Thank you. Learn about complete loan life cycle. So we learned that a loan moves through application, document collection, credit assessment, underwriting approval, funding, repayment, and closure. So today we will go deeper into technology behind the loan processing, loan origination system, LOS. As a banking business analyst, you will often work on LOS project because banks continuously improve their loan lending process. What is a loan origination system? A loan origination system LOS software platform used by the banks to manage process of creating new loan. It helps the bank move loan application from application submission to loan approval and funding. Simple explanation: without LOS, a customer submit loan request, employees manually collect documents, employees manually check credit, employees manually approve loans. This is slow and error prone. So with an LOS, customer applies loan, system collect information, system validates data, system checks credit, system routes application, loan decision is made. Loan is funded. Why do banks use LOS? Banks use LOS speed up the loan approvals, reduce manual work, improve customer experience, reduce errors, apply consistent lending rules, track applications, support compliance. LOS high-level architecture. A typical LOS connects with multiple systems: customer channel, mobile app, website, branch, loan origination system, credit bureau, fraud detection system, document management system, decision engine, core banking system. Main component of an LOS: application management. This component manages the loan application functions like create application, update application, track status, assign application. So customer example, application ID loan 1001, customer David Johnson, loan amount 50,000, status under review. Customer information, allows retrieves customer details, source, gift system, customer database, core banking system, information, name, address, employment, existing accounts. Document management, the allows manages required documents, example, identification, income proof, bank statement, tax documents. So business rule, document must be uploaded, validated, stored securely. Credit check integration, the allows connect with the credit bureaus, the system retrieves credit score, credit history, existing debt. Example, customer credit score 780, risk is low. Decision engine, the decision engine applies business rules. Example, if credit score is greater than 700 and the income is greater than 50,000 and the debt ratio less than 40%, then the approve application. Workflow management, workflow controls the movement of application submitted, document review, credit review, under review, approval, funding. Notification management, the allows sends communication, example, email, your application has been received, SMS, loan has been approved, loan application status, a BA must understand application status, common status, draft, customer started the application but not submitted, submitted application received by the bank, pending document, additional information required, under review, bank is evaluating application, approved, loan request accepted, rejected, loan required, request is declined, funded, money released to customer. End-to-end LOS flow. Let's follow a customer. Customer Sarah request 25,000 personal loan. Step number 1, Sarah opens mobile banking. Step number 2, Sarah submit loan application. Step number 3, LOS create application record. Step number 4, LOS retrieve customer information. Step number 5, customer uploads documents. Step number 6, credit bureau check performed. Number 7, decision engine evaluates rules. Step number 8, loan officer review application. Step number 9, loan approved. Step number 10, LOS and approval to core banking system. Step number 11, loan account created. Step number 12, funds released. Business analyst role in LOS project. A BA working on LOS project performance many activities, requirement gathering. The BA interviews loan officers, credit analyst, compliance team, customers, questions. How is the loan process today? Where are the delays? What rules determine approval? Process mapping. A BA documents current process as is and the future process to be. Example as is, customer visit branch, employee enters application manually. Approval take 5 days to be, customer applies online. Document uploaded digitally, approval completed within hours. User story for LOS, Epic digital loan origination, feature loan application submission. As a customer, I want to submit a loan application online so that I can request financing without visiting branch. Acceptance criteria. Customer must provide required information. Customer must upload required documents. System must create an application number. Customer must receive confirmation. Functional requirement. The system shall allow customers to submit loan application. The system shall generate unique loan application ID. The system shall validate required documents. The system shall integrate with the credit bureau services. The system shall update loan application status. Think like a business analyst. Business say loan approval takes too long. A beginner asks, should we make the system faster? BA investigate. Where is the bottleneck? Is document review slow? Is credit checking slow? Are approvals waiting? Are manual steps unnecessary? BA process questions during the requirement gathering. Ask who submit the loan application, who reviews it, what information is required, what rules determines approval, what happens when information is missing, which systems are involved, what notifications are required. Think like a BA exercise. Banks want to improve its personal loan process, answer current problem, stakeholder, system involved, possible improvement. So common beginner mistakes. Mistake number 1, thinking LOS only stores application. LOS manage entire loan workflow. Mistake number 2, ignoring business rule. Loan approval depends heavily on rules. Mistake number 3, ignoring integration. LOS connect with many banking systems. Lesson summary. A loan origination system manages the journey of the loan application. It handles application, documents, credit check, decision, workflow, approvals, funding, a banking business analyst working on LOS projects must understand both the business process and the technology supporting the process. Remember this rule, the loan origination system where the customer's loan request becomes structured, controlled and trackable banking process. Thank you. That's the end of lesson number 37. In the previous lesson, we learned about loan origination system, LOS. We learned that the LOS manages the loan journey, application submission, document collection, credit checks, and approval workflow, loan funding, right? So today we'll learn about the most important decision-making part of the loan process, which is credit decisioning and underwriting. So this is where the bank answers the most important question: should we lend money to this customer? Why credit decisioning exists? When a bank gives a loan, there is always a risk, right? So the customer may pay the loan on time, miss payment, default on the loan. The bank needs process to evaluate risk before lending money. This process is called credit assessment. What is credit decisioning? Credit decisioning is the process evaluating the customer financial information and deciding whether loan should be approved or not. Okay, so this decision can be approved, rejected, or referred for a manual review. Some simple example: customer David requests 50,000 loan. The bank checks income, credit history, existing debt, employment, payment behavior. Based on the result, decision is approved or rejected, right? So what is underwriting? Underwriting is the detailed evaluation of a loan risk. An underwriter reviews customer information, financial documents, credit history, risk factors. The underwriter determines, is this customer likely to repay the loan? Credit decisioning was underwriting. Many beginners confuse these terms. Let's compare credit decisioning and underwriting. Automated evaluation, credit decisioning, detailed risk review, the user's rule scoring, user's judgment and analysis, faster decisions, more complex decisions, often system driven, often human assisted. Okay. Credit score, one of the most important factors in lending is the credit score. A credit score represents customer credit behavior. It considers payment history, amount of debt, credit history length, credit usage, new credit applications. Credit score example: a customer A, credit score 780, risk is low. Customer B, credit score is 550, risk is higher. The bank may offer different terms based on risk. Debt to income ratio, DTI. Okay, another important lending measurement is debt to income ratio. It compares customer debt payment against customer income. Formula DTI: monthly debt payments divided by monthly income. Monthly income 5,000, monthly debt payment 1,500, DTI 30%. So lower DTI usually indicates lower risk. Credit decision progress. Let's follow a loan application. Customer Sarah loan requested 25,000. Step number 1, application submitted. Step number 2, allows collect customer information. Step number 3, credit review information retrieved. Step number 4, decision engine evaluates rules. Step number 5, risk score calculated, decision generated, possible outcome: approved, loan continued, rejected, or customer notified, manual review, underwriter review the application. So automated decisioning engine, modern banks use the decision engines. Decision engines apply business rules automatically. Example: rule number: if credit score greater than 700 and income greater than 60,000, then approve. Rule number 2: if credit score less than 500, then reject. Rule number 3: if application is unusual, then send for manual review. So business rules in credit decisioning: example, income rule: customer must have a minimum income. Example, annual income must be greater than 40,000. Credit score rule: customer must meet minimum credit score. Credit score must be above 650. Employment rule: customer must have stable employment. Debt rule: customer debt cannot exceed allowed limits. Credit score decisioning system architecture: a typical flow: customer application, loan origination system, credit decision engineering, credit bureau, risk scoring system, underwriting system, decision, core banking system. So system involve a BA should understand the system. Loan origination system manage application, credit bureau system provides credit history, decision engine applies approval rules, risk management system calculate risk, document management system store evidence, core banking system. Credit creates loan amount after approval. Business analyst role. A BA working on credit decisioning project must understand business rules. Example, what credit score is required. Decision logic. Example, when should an application go to manual review. Data requirement. Example, what information required to calculate risk. Integration requirement. Example, how does the system connect to credit bureaus. Sample user story. Feature automated loan decisioning. User story. As a loan officer, I want the system automatically evaluates the loan application so that decision can be made faster and consistently. Acceptance criteria. System must retrieve customer credit information. System must evaluate approval rules. System must calculate risk score. System must generate decisioning outcomes. System must route exceptions for manual review. Functional requirement. Let's understand. The system shall retrieve credit bureau information. The system shall calculate customer risk score. The system shall apply lending rules. System shall generate approval decision. System shall send exception to underwriting. So think like a business analyst. Business problem. Too many loan applications are require manual review. A BA investigate why are the application failing. Automated rule. Are rules too strict? Is the customer data incomplete or integration failing? Can the process be improved? Real project example. A bank wants faster personal loan approval. Current process loan approval takes 5 days. Future process automated decision within minutes. BA activity analyze the current process, identify rules, document requirements, map integration, support testing. Think like a BA exercise. Customer zone information income 90,000, credit score 790, debt low. Question: would this customer likely be considered low or high risk? What system provide information for this decision? Who reviews exceptions? Why are the business rule important? Common beginner mistake. Mistake number 1. Thinking loan approval is only based on credit score. Bank consider multiple factors. Mistake number 2. Thinking in automation removes human completely. Complex still require human review. Mistake number 3. Ignoring regulatory requirements. Credit decisioning must be fair and compliant. Lesson summary. Credit decisioning determines whether bank should approve a loan. It uses credit score, income information, data analysis, business rules, risk models. Underwriting provide deeper analysis for complex cases. Banking business analyst must be understand decision logic, data requirements, system integration, business rules. Remember this rule: a bank does not approve loans because the customer asks money. It approves loan because the customer meet risk and business criteria. So that's the end of lesson number 38. About loan processing, loan origination system, credit decisioning, underwriting. Today we will learn another major area of banking: payment systems and payment processing. Payments are foundation of modern banking. Everyday customers use debit cards, credit cards, online banking, mobile banking, electronic fund transfer. Behind every payment, multiple systems communicate to safely move money. As a banking business owner, you will often work on payment platform, transaction process system, API integration, fraud detection system, settlement systems, core banking integration. What is a payment? What is a payment? A payment is the transfer of the money from one party to another. Example: Sarah buys groceries. Customer: Sarah, merchant, Walmart. Purchase amount $100. The bank moves money from Sarah's account to the merchant, right? So why are payment systems important? The payment system allow customers to buy product, pay bills, transfer money, receive salaries, send money internationally. Without payment system, modern banking cannot function. Payment participants. As a simple payment involves many participants. Example: customer, merchant, payment terminal, payment network, customer bank, merchant bank. Real world example: Sarah used her debit card to buy groceries. She tapped her card. Within second, merchant received payment request. Bank checks account. Bank approves the payment. Merchant receive confirmation. Transaction is recorded. Looks like simple, but many systems work together. Payment processing flow. Let's understand the complete journey. Step number 1: customer initiate the payment. Sarah purchased groceries. Transaction details: amount $100. Merchant: Walmart. Payment method: debit card. Okay, so Walmart is a grocery store in Canada. So step number 2: payment terminal send request. The payment machine captures card information, transaction amount, merchant detail, transaction time. The request is sent for authorization. Step number 3, payment network routes request. The payment request travel through the payment network. Example, Visa, MasterCard interact. The network identify the customer's bank. Step number 4, bank validates the payment. The bank check customer account. Is the account active? Available balance. Does the customer have enough money? Fraud is, does this transaction look suspicious? Card status, is the card valid? Step number 5, authorization response. The bank send the response. Possible outcome approved. Payment can continue. Decline, payment cannot proceed. Reason, insufficient fund, expired card, fraud detection, account restrictions. Step number 6, settlement. Authorizes is not final movement of the money. Settlement completes the actual transfer. Example, customer bank transfer fund to the merchant bank. Authorization was versus settlement. This is an important concept of banking BS, authorization. Question, can this transaction happen? Example, customer has enough money. Settlement question, move the actual money. Example, funds are transferred between banks. Type of payments, banks are support many payment method. Debit card payment, money is directly taken from customer's bank account. Example, Sarah buys groceries, account balance decreases. Credit card payment, customer uses borrowed credit card. Example, credit limit 5,000, purchase 500, remaining credit 4,500. Electronic fund transfer, EFTs, electronic movement of money. Example, payroll deposit, bill payment, direct deposits. Wire transfer, used for larger transaction. Example, business payment, international transfers. Interact transfer, common example in Canada, used for person to person money transfer. Example, Sarah sent $1,000 to John. Payment status life cycle, payment move through the different status. BMS understand this. Initiated, customer start payment. Authorized, bank approves the payment. Pending, payment is waiting for completion. Completed, payment successfully processed. Decline, payment rejected. Reverse, payment cancel after completion. Payment system architecture. A typical payments architecture looks like customer application, payment API, payment gateway, fraud detection system, payment processor, core banking system, transaction database. System involved in payments. Mobile banking system allows customers to initiate a payment. Payment gateway handles the payment request. Payment network routes transaction. Fraud detection system identify the suspicious activity. Core banking system update the account balances. Transaction database store the payment history. Fraud checks during the payments. Before approving payments, bank analyze transaction amount, customer location, device information, previous spending patterns, merchant risk. Example, normal behavioral customer spend $50 to $100 daily, suddenly 15,000 purchases overseas. The fraud system may block transaction, requires additional information for verification. Send alert. Business rules in payment system. Example, rule number 1, customer must have sufficient available balances. Rule number 2, inactive card cannot process payment. Rule number 3, large transaction require additional authentication. Rule number 4, failed payment must not reduce customer balance. Rule number 5, duplicate transaction must be prevented. Business analyst role in payment projects. Banking business analyst must analyze payment process. How does the money move? Business rules. What condition must be met? Data requirement. What information is required? Integration. Which systems communicate? Exceptions. What happens when payments fail? Sample Epic. Digital payment processing platform. Sample feature debit card payment processing. Sample user stories. A banking customer, I want my debit card payment to be processed instantly so that I can complete purchase purchase quickly. Acceptance criteria, customer must have an active account, customer must have a valid debit card, system must validate available balance, fraud check must be completed, approved payment must be updated, account balance, customer must receive confirmation. Functional requirement, the system shall accept debit card payment request. Functional requirement 2, the system shall validate customer account status. Functional requirement 3, the system shall check available balance. Functional requirement 4, the system shall perform fraud validation. Functional requirement 5, the system shall record completed transaction. Think like a business analyst. Business problem, customer reports that payments sometimes fail. BA investigate questions. Where did the failure happen? Was the card valid? Was the account active? Did fraud rules block the payment? Did the payment gateway respond? Did core banking update correctly? So payment defect example issue. Customer was charged twice for one purchase. Possible causes merchant send duplicate request, network timeout, retry logic issue, transaction processing reprocessing error. BA analyze the end-to-end process to identify the root causes. Okay, think like a BA exercise scenario. Sarah purchased a laptop for 1500 using her debit card. Answer: who are the participants? What systems are involved? What checks happen before approval? What happens if the payment is declined? Common beginner mistakes. Mistake number one: think payments happen instantly without processing steps. Many systems communicate behind the scenes. Mistake number two: confusing authorization with the settlement. They are different stages. Mistake number three: ignoring failed payments and exception. Payment failures are important. BA scenarios. Lesson summary: payment system allow money to move between customers, merchants, and banks. Important concept: payment initiation, authorization, approval, decline, settlement, transaction status, fraud checks. System integration: a banking business and must understand the payment processing because payments are one of the largest areas of banking technology. Remember this rule: a payment is not a single action, it's a chain of communication between multiple systems that must work together securely and accurately. So that's the end of lesson number 39. We learn about payment systems, payment scoring, payment processing, authorization, settlement, and transaction status. So today we'll learn one of the most important areas of modern banking: fraud detection system. Every day, millions of banking transactions occur. Most transactions are legitimate. However, criminals are attempt to steal customer information, access accounts, make unauthorized transaction, transfer stolen money. Banks use fraud detection system to identify the prevent suspicious activity. What is a banking fraud? Banking fraud is illegal activity where someone attempts to obtain money or financial information through the deception. So example: stolen credit card usage, account takeover, identity theft, fake loan application, unauthorized transfers. Why do banks need fraud detection? Imagine a customer normally spend 50 to 100 per day. Suddenly a transaction of 20,000 occurs in another country. The bank needs to ask, why is this really the customer? Is this someone using stolen information? Fraud detection system help answer this question. What is a fraud detection system? A detection system is a technology platform that monitors transaction and identifies the suspicious behavior. It analyzes customer behavior, transaction pattern, device information, location, transaction amount, history, activity. A simple example: customer David, normal activity, coffee purchase $5, grocery purchase $100, new transaction, luxury purchase 15,000. Location different country. The fraud detection: risk score high, action sent to review. The type of banking fraud: card fraud, someone use stolen card information. Example: criminal obtains card details and make purchases. Account takeover: a criminal gains access to customer's account. Method: stolen password, phishing, malware. Identity fraud: someone used another person's identity. Example: opening a bank account using a fake information. Payment fraud: fraudulent payment activity. Example: unauthorized transfer, fake payment, duplicate transaction. Loan fraud: fraudulent loan application, fake income documents, false identity, mispresented financial information. Fraud detection process. Let's follow a transaction. Customer Sarah, transaction 5,000, transfer. Step 1: transaction created, Sarah submit transfer. Step number 2: fraud system receives data. Information include customer ID, amount, location, device, transaction history. Step number 3: risk analysis. System evaluates, is this a normal behavior? Step number 4: risk score generated. Example: risk score is 85 to 100 to 80 100. High risk score. Step action taken. Possible actions: approve, reject, request verification, send for investigation. Fraud risk scoring. Fraud system assign a risk score. Example: 0 to 30, low risk 30 to 70, medium risk 70 to 100, high risk. Example: risk factors, transaction amount. High amounts may increase risk. Location: unusual location increase risk. New device login may increase risk. Time: unusual transaction time may increase risk. Example: customer usually shop during daytime. Transaction occurs at 3 a.m. Customer behavior: system compares current activity with the previous behavior. Rules engine in fraud system. Many banks use rules engines. A rules engine applies predefined business rule. Example, if transaction amount is greater than 10,000 and the customer loan is unusual, then send for review. Example, rule number 2, if multiple failed login attempts, then lock account. Example, rule number 3, if new device or larger transfer, then require additional verification. Machine learning in fraud detection. Modern fraud system also use machine learning. The system learns customer behavior, fraud pattern, transaction trends. It identifies unusual activity automatically. Example, the system learns Sarah always pay bills on Monday. A payment happens on Friday at midnight. The system may flag it. Fraud system architecture. Typical banking fraud architecture: customer transaction, payment system, fraud detection engine, rules engine, machine learning model, risk core, decision, core banking system. System involved: payment system provide transaction information, core banking system provide customer account information, fraud detection system analyze the risk, customer authentication system verifies identity, case management system allow investigators to review suspicious activities. Business analyst role in fraud projects. A BA working on fraud system must understand business rules, what transactions should be blocked, risk criteria. Example, what create high risk investigation workflow. Example, who reviews the suspicious transaction. Notification. Example, how should customer be related, regulatory requirements, what record must be maintained. Sample, epic, a real-time fraud monitoring system. Simple feature suspicious transaction detection. Sample user story of fraud. As a fraud analyst, I want the system to identify suspicious transactions so that I can investigate potential fraud quickly. Acceptance criteria: system must analyze transaction in real time. System must calculate fraud risk score. System must apply fraud rules. High risk transaction must be flagged. Fraud analyst must be able to review cases. Functional requirement 1. The system shall monitor transaction in real time. The system shall calculate transaction risk scores. System shall identify suspicious patterns. The system shall create investigation cases. The system shall notify the customer when required. Think like a business analyst. The problem, fraud losses have increased by 20%. A BA investigate question which transactions are causing losses. Fraud rules outdated. A customer reporting unauthorized activity. A false positive too high. Can machine learning improve detection? Fraud system challenge. A bank blocks too many legitimate transaction. Problem, customers are frustrated. The BA must balance security versus customer experience. Think like a BA exercise scenario. Customer normally spend $100 daily. Today, 8,000 international transactions occur. Why might be the system flag this? What information should be fraud system analyze? What actions can be the system take? Who may review the case? Common beginner mistake. Mistake number 1. Thinking of fraud system only block transaction. They also investigate and monitor patterns. Mistake number 2. Ignoring the false positives. Blocking the legitimate customer create problems. Mistake number 3. Focusing only the technology. Fraud detection requires business rules and regulations. Lesson summary. Fraud detection system protect banks and customers by identifying suspicious activity. They use rules engine, risk scoring, customer behavior analysis, machine learning, real-time monitoring. A banking business analyst working on fraud project must understand fraud processes, business rules, risk decisions, system integration. Remember this rule: a good fraud system does not stop all transactions. It identifies risky transactions while allowing legitimate customers to continue the banking normally. Okay, all right, that's end up the lesson number 40.